In the current administration, we have an SEC that seems to be functioning in a way that it actually is looking out for the best interest of investors, as opposed to the SEC, the previous SEC under the administration of Biden, where Gensler seemed to be working for the big banks and their interests. This article here from Coinpedia from today, December 3rd, says Crypto News Today. The SEC stops ProShares from launching XRP and other leverage crypto ETFs. And the reason is stated in the article as to why they did it, but the point is that it literally is looking out for the interests of investors. It's in harmony with my way of thinking. Don't be greedy. Don't be greedy because what it is the SEC halted ProShares' plan to launch a new lineup of 3x leveraged crypto funds, including products that are tied to Bitcoin, Ethereum, Solana, and XRP. The regulator says the proposals do not meet the agency's leverage rules, and nothing can move forward until ProShares fixes the filings or withdraws them completely. Let's talk a little bit about that.
Check the mic and make sure it sound right.
The article goes on to say, under what triggered the block, that earlier this month, ProShares submitted amendments seeking approval for several high leverage ETFs designed to deliver triple the daily performance of major assets, including cryptocurrencies and popular tech stocks. However, the SEC responded with a detailed letter stating that the funds violate Rule 18F 4, an Investment Company Act rule that limits how much leverage an open ended fund can take on. Number one, how are they going to achieve a 3x in the first place with fixed assets like crypto assets? I mean, can a crypto asset multiply 3 times? Yes, but as my other videos have shown, the performance of the asset does not really dictate the performance of the ETF, and the performance of the price of the asset doesn't either. And so, what really it sounds to me, and you have to keep in mind, if there's high leverage, then there's high risk. It's really that simple. If there's higher leverage, then there's higher risk. And a 3x gives just more and more opportunity, it seems, to take your money. Now, it says about an open ended fund as well. And what an open ended fund is a fund where they can issue additional shares based on the demand. There's no fixed amount of shares in the fund that can be offered. As long as there's a demand for it, it can be issued. Whereas with a closed-ended fund, they have an IPO where they issue all the shares of the fund to the markets, and then the markets determine the price, balancing those closed-ended fund shares between each other, between buyers and sellers, but there's no new shares created. And so that's probably also what creates the deficit in the net asset value of these open ended funds. Because if you continue to issue shares and your net asset values don't increase or decreases, you're diluting the value of those shares. And so it's good that the SEC is placing this limitation on these 3X's. And the way they do it is under the rule the fund has a value at risk that cannot exceed 200% of an equivalent unleveraged portfolio. The SEC says that ProShares proposed a 3x products exceed that limit, making them incompatible with the standards that govern leverage risk. So that is really an investor protection that's being implemented here, and it seems impartially. The interesting thing about it is ProShares doesn't move forward on anything. It says the regulator also reminded ProShares that it must delay the effectiveness of the filings until these problems are resolved. What they said under this subheading here, fix these issues, the SEC made it clear that it will not continue reviewing any of the proposed products until ProShares rewrites the strategies to follow Rule 18F4. Now, why would ProShares do that? I don't know. I don't know. ProShares is not small change. I mean, ProShares is a pretty large corporation. And if we were looking to about them, they've been at the forefront of ETF revolution since 2006. So since 2006, we're looking at going on their 20th year here. You would think that they know better, right? One would think. And so whether they know better or not, they've been sidelined. It says the halted lineup includes a 3x Bitcoin ETF, a 3x Ether, a 3x Solana, and a 3x XRP ETF. Dozens of other proposed 3x leveraged stock and commodity ETFs were also affected, as listed in the SEC's appendix. And so that means there were many who were trying to do that 3x leverage. And quite frankly, people, what I see with trying to appeal to the greed of the uninformed, because, like I said earlier, the higher the leverage, the higher the risk. And it just seems to me like it's another way to drain retail of their funds and give you a losing product. And so far, even though the numbers are pretty awesome on the amounts of monies being invested in these ETFs, it's not translating into very nice increases in the value, the net asset value of the shares in these ETFs. And as we have seen, the cryptos themselves have been kind of in a slump. Is that going to change? Well, we would hope that it does. What happens next? They got two options: revise the ETF strategies to stop trying to suck the blood of the retail investor, really, or withdraw the filings completely. And until ProShare responds, the SEC will not move forward with any review. So that slick trick put them on the bench, and they're not going to be able to do much until they get it squared away. Seems to me the easiest thing to do is to just withdraw the filings, but they'll probably drop back to a 2x instead of a 3x. I did a video on Tucrium about the 2x fund they created. I'll put the cards here. Check it out. So it's good to see the SEC stepping up and making sure that they do what they're supposed to be doing: investor protection. On another note, there's development in crypto regulations. And why is this important to us? When these regulations get tamped down and hammered in and set, a lot of coins are probably going to not fit the description in the bill, and they're going to be counterfeit. So it pays to keep our eyes on the progression of the regulations in the crypto industry, because once the regulations come, that's probably when 99% of them will disappear. But this is specifically in relation to stablecoin, and it shows that the FDIC is going to release stablecoin rules under the Genius Act this week. We're also looking for a new Fed chair to be announced this week. They're going to unveil its first Genius Act framework this month, setting federal rules for stablecoin issuers, licensing, bank oversight, and reserve safeguards. The new FDIC rules and upcoming guidance on tokenized deposits signal a major shift as U.S. regulators build a unified framework for stablecoins and digital banking. It's not going to stop at stablecoins. The Genius Act is short for Guiding and Establishing National Innovation for U.S. Stablecoins Act. Okay, instead of relying on the patchwork of state rules, it provides a unified approach, assigning responsibilities to both federal and state authorities: the FDIC, the Federal Reserve, which is going to get a new lead, the OCC, and the NCUA. Recently participated in a House Financial Services Committee hearing to explain how they will implement the law. And so, what does that mean? Like I said, if you're in junk coins, you better start looking at your coins. You better start reading some white papers. You better know what you hold. Bottom line, know what you hold. Don't go after the first shiny thing. They give you these crazy coins that come out with these funky names, and you don't even know what they do. You just want to get in on the hype. Well, keep in mind that that mentality, that greed, and that hype is what's dashing most investors down to the ground. And as these regulations come in, they're going to codify and qualify specific crypto assets to either exist or not exist. They have to contribute to the crypto ecosystem. It's good to see the SEC is working to actually do some investor protection. It's good to see that they're creating a crypto friendly environment in the United States. Nothing's going to stop this. It is the wave of the future. Don't let greed and meme coins and craziness get you caught up, because if it gets you caught up, it also might get you broke out. Just don't do it. I'm DK Will. This is DK Will Talk About It. Catch you on the next one. Please like, please subscribe, and come on back. Have a wonderful day.
Check the mic and make sure it sound right.